Reading out of the Reference Guide to Regulatory Compliance within the Privacy section, paper page 887 out of the old text, Guidance on Authentication in an Internet Banking Environment. This is from FFIEC Interagency Guidance and also Facts on FFIEC Guidance on Authentication in an Internet Banking Environment. As internet banking and other electronic banking methods gained acceptance with consumers, fraud and identification theft also proliferated. In 2001, the Federal Banking Regulatory Agencies issued an interagency guidance entitled Authentication in an Electronic Banking Environment. This guidance concentrated on bank-initiated controls to identify consumers who use electronic banking services. On October 12th of 2005, the agencies issued an updated guidance entitled Authentication in an Internet Banking Environment. This guidance, with its subsequently issued frequently asked questions in August of 2006, provides direction to financial institutions for evaluating and implementing authentication systems and practices. The guidance focuses on internet banking delivery channels but is applicable to all types of electronic banking. Coverage. A. Applies to financial institutions that engage in any form of electronic banking, including internet banking and telephone banking. B. Applies to retail and commercial customers. C. Does not apply to debit or credit card transactions. D. Does not endorse any particular technology. And E. Applicable to all forms of electronic banking service activities. Subpart 2. Purposes of authentication system. A. Safeguarding customer information. B. Prevent money laundering and terrorist financing. C. Reduce fraud. D. Inhibit identity theft. And E. Promote the legal enforceability of electronic agreements and transactions. Subpart 3. Requirements. Risk assessment. 1. Risk assessment process should identify all transactions and levels of access associated with internet-based customer products and services. B. Identify and assess the risk mitigation techniques, including authentication methodologies used for each type of transaction and level of access. Next page. Under the requirements section, first part, risk assessment. The risk assessment should also include the ability to gauge the effectiveness of the authentication system. The risk assessment should also be evaluated in light of the type of customer, retail or commercial, B, the customer transactional abilities, bill payment, loan origination, wire transfer, and so forth, C, the sensitivity of the customer information being transmitted, D, the ease of using the communication method, E, the volume of transactions. Number 3, authentication programs should be implemented to ensure the controls and authentication levels are appropriate for the financial institution's risk. Number 4, comprehensive authentication should include development of information security standards, integration of authentication processes, risk assessments within business lines that support selection of authentication tools, and D, central authority for oversight and management. Number 5, assessments must be updated and authentication methods reviewed to ensure appropriate changes are made. 6, single-factor authentication is considered to be inadequate if it is the only control mechanism for high-risk transactions, including those with access to customer information and movement of funds. A, when single-factor authentication is considered inadequate, the financial institution should implement multi-factor authentication involving more than one factor or layered security. Authentication methodologies include 3 factors: something the user knows, such as a PIN or password, something the user has, such as an ATM card or smart card, and something the user is, such as biometric characteristics, for example, a fingerprint. Multi-factor authentication is not required. It is one of several methods that can be used to mitigate risk. 7, banks may not rely on single-factor authentication in high-risk transactions, even if it chooses to reimburse the customers for fraud losses. Risk assessments must be completed and in place by December 31st, 2006, and customers may not opt out of additional authentication controls. Now, here's what I don't understand is, what is the definition of multi-factor authentication? Because it is required when we're talking about highly using online access for highly sensitive information that can allow for the movement of funds. That multi-factor authentication is required and is one of several methods that can be, and there are several methods of achieving multi-factor authentication. Maybe I'm thinking multi-layer authentication, but I'm not seeing that anywhere. I'm seeing single layer authentication being referred to. I see single factor authentication, multi-factor authentication, and I just don't like that statement, period. Where it says multi-factor authentication is not required is one of several methods that can be used to mitigate risk. Now, it might not be required for some non-essential, social networking, banking activity, but like posting on the bank's website or message board. But I do believe that multi-factor authentication is required, and I believe that's part of what I'm reading right now in the guidance on authentication in an internet banking environment. So I just don't really like that bullet. But anyway, B, account origination and customer verification required by the USA Patriot Act, important in reducing fraud and identity theft. And financial institutions should rely on reliable alternative methods of identification because physical presentations of identity proof often are not available. And monitoring and reporting. The purpose is to determine if there has been unauthorized access to computer systems and customer accounts, and should assist in the detection of fraud, money laundering, suspicious activity as required by BSA, compromised passwords, or other unauthorized activity. Multiple layers of control are important to prevent fraud and safeguard customer information, which involves here performing transactional analysis and establish dollar amounts that require manual overrides. One of those is a detection control, and one of those is a prevention control. So that's what they mean by multiple layers of control. The other kind of control is a corrective control. 4, reporting mechanisms should inform security administration when users are no longer authorized and permit timely removal of user access. Number 5, independent parties should be used to review activity reports that document the security administrator's actions. And 6, management should ensure third-party outsourced critical systems or processes provide appropriate monitoring in a timely manner on suspected unauthorized activities. Letter D, customer awareness. 1, key defense against fraud and identity theft, I suppose, is customer awareness, is what they're trying to say. Financial institutions should evaluate customer education efforts and implement customer awareness programs and periodically evaluate their effectiveness. 4th, evaluation methods include tracking the number of customers who report fraudulent attempts to obtain their authentication credentials, and B, the number of clicks on information security links of websites, and the number of statement stuffers or direct mail communications. Oh, basically, like how many times someone clicks on educational resources within the website, or how many times you send out to them safeguarding information booklets. I don't know if this is the last page. It is. That is the last page. That was very, very short. There isn't even an enforcement section. It's just guidelines